out of oil, man. But go ahead, Edward.
Okay, here we go.
Let it rip.
Welcome. You're listening to the Best of Investing on News Talk 910. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. For those of you listening for the first time, here's our format. A few guys sitting around a bar having drinks without the drinks. Darn it, I forgot the drinks again. Talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender. Our phone number is 888-912-1190. Now write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. And their website is lighthouse4fun.com. You can reach them at 916-777-5511. And today's trivia theme is, yep, there it is. I knew Mark was going to give me the look. Is famous phrases from TV shows or movies.
Oh, I'm going to nail this one.
You're going to nail this one. Okay. Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. We're also on television, Comcast Channel 26 on Saturdays at noon and Sundays at 6 p.m. And don't forget to record us on the website dar.fm. Again, a quick reminder, World Wraps in Corn Madera and Santa Clara is still giving our listeners a free smoothie. God bless those people. If you purchase a wrapper bowl, if you mention the Best of Investing, go there for lunch today. Best wraps in town, and don't forget to mention the Best of Investing for your free smoothie. Today's guest is Todd Chapman, who's president of JMA Ventures, who's going to talk to us about owning vacation homes and fractionalized interest and other real estate matters. Todd, welcome to the Best of Investing.
Glad to be here, Edward. Thank you.
Okay, now, why don't you give us a brief overview as to exactly what you do?
That may take more time than we
Okay.
actually have, but I'd be happy to do so.
Briefly.
So JMA Ventures, the firm that I work with, has been based in San Francisco and has been doing real estate within Northern California for the last 25 years. And for the last 10 years, since I've been at JMA, we've been focused heavily on lifestyle and leisure product, which includes vacation, residential, both in urban and resort locations. In particular, now we have 2 projects. One, the Fairmont Heritage Place at Ghirardelli Square, located on the water in San Francisco, that is in sales, as well as the Constellation Residences, which is mid-mountain slopeside up at North Star on the ski resort.
Okay, so tell us specifically about the Ghirardelli project.
Sure.
Exactly, what is that? How do people buy into it?
Yeah, so a little background. I think everyone, your listeners, are probably familiar with Ghirardelli Square. It's a National Historic Landmark. It's been around for about 120 years.
Good chocolate.
Great chocolate.
Yeah.
I always get too much of it.
Yeah.
But when we purchased the square about 7 or 8 years ago, we decided that we were going to convert some of the old warehouses to residential. And so what we did is we partnered with Fairmont, another prominent brand within San Francisco, and we created San Francisco's first private residence club, which is essentially a fractional product where owners can buy 1/10 interest in high-end 2 and 3 bedroom residences in San Francisco. That product's managed by Fairmont and serviced by Fairmont.
So fractional ownership, how is that different from a timeshare?
So the primary difference is a fractional or private residence club product, you actually receive a deed to a unit. So most timeshare products, you're either receiving a points-based product where you trade points for time, or you're given certain slots, but you don't actually own a physical deed, which means you can't finance it. I mean, our product you can finance like a traditional home with your bank.
Are banks lending on 1/10 of an interest?
So they have been, and so traditionally there's a number of lenders that would lend against fractional. It actually, for Mark's benefit, it actually has one of the lower default rates of any residential product out
Wow.
there.
Interesting.
So 1/10 interest, so does that mean you get to stay in it for 1/10 of the year? Is that how that works? Is it a time-based fraction?
It is. You receive 35 guaranteed days a year of use. You can stay there in excess of 35 days on a space available basis anytime as well, which is a real nice benefit.
Do you have to buy that time?
No, you don't. In fact, if you've used your 35 days and you and your want to come to San Francisco and you call up and it's a Thursday and you say to your owner service rep, Zach, I'd like to come, on Friday and Saturday. Is there any rooms available? And they say yes, you can come and you can stay for no cost.
Okay.
So
And
it's a
they
nice
usually,
benefit.
10 times 35 is 350.
Right.
I had to take off my shoes and socks to figure that one out. But and then there's 365 days, so the other 15 days gets used for cleaning usually and repairs.
Cleaning and maintenance and those types of things. That's right.
So I've heard of fractional versus timeshare, and I guess the promotion on why fractional is better is as you said, you actually get a deed, so you actually do own a fractional interest. Is there appreciation opportunities, or what's like from an investment standpoint, what has that been looking like? And of course, we're talking like post crash now, so what's the market looking ahead in terms of investment opportunity?
Well, I think from our standpoint, we're actually very blessed. If you can believe it, we haven't had one resale on the property since we opened in 2008. And that's a testament to our owners really loving the product. I think one of the things that has really bolstered their confidence in it from an investment point of view is it's Ghirardelli Square. So
Sure.
you can go anywhere in the world, and generally people are going to know about Ghirardelli Square. And I think that sense of owning a timeless and historic place helps people kind of make the leap to say, I feel comfortable with this investment, and that's really worked well for us.
So no one's sold it yet or resold it yet. So when did these first go on the market?
We opened the property in August of 2008, so not great timing. We closed almost
really.
200 of our pre-sales, which was great, and we haven't had a single owner elect a resale,
But
which
I think
makes
the
us unique.
Yeah, the biggest part is the fact that nobody's defaulted.
Yep.
Yeah.
Do most people buy it cash?
They do now.
So you're getting a higher. I would think that people who buy this are going to be higher net worth.
They are. It's a top 5% demographic. It's people usually that either travel a lot for business or maybe empty nesters, and they're downsizing their primary home and are looking for more options in an urban location.
And how long? I mean, what do you do if, let's say, you don't sell out? What happens to that extra? Do you just hold it in your inventory, or?
So what we do at Fairmont Heritage Place Ghirardelli Square is Fairmont runs a hotel in the unsold inventory.
Oh, that makes sense.
So if you're looking to come to the city, the property is, as I was indicating, is actually the #1 performing hotel in the United States. It's the #1 hotel on TripAdvisor in San Francisco. It's actually done very, very well because people love the experience when they're on the waterfront in the old brick historic buildings, and so it's been a good way for us to be able to keep the inventory full.
Yeah,
So
with the time. Go ahead.
Do the people who come and stay there as a hotel, do they even know? Is it even obvious that this is a fractional ownership opportunity, or is it just operated like a hotel? And oh, by the way, if you like it, you can own a piece.
It's the latter. So we really try to go out of our way not to make it a hard sell experience. I mean, the guests that are staying with us on a hotel basis are paying in excess of $1,000 a night to be there.
Wow. I mean, there's no guy with a kiosk and saying, hey, we're going to give you 2 free luau tickets if you watch this
Yeah.
timeshare presentation.
Which goes back to your question. What's the difference between fractional and timeshare? And a lot of it's how you sell it.
Well, and also,
Marketing,
and also timeshare. In theory, you own a week. Not in 35
Right.
days worth.
Right.
That's amazing. Tell you what. Let's ask about the cost
Sure.
of that now, and then we'll cut the break. So, generally, what does it cost someone to buy the fractionalized?
So we have 3 unit types at the property: 1, 2, and 3 bedrooms. What a buyer buys with us is a floor plan. So if they're a one bedroom buyer, or 2 bedroom, or 3 bedroom buyer, they tell us what they'd like. Our current pricing, we just actually are raising prices given some of the velocity we're seeing
God
in
bless
sales.
you guys.
I know.
They're pushing the market up.
Yeah.
We're very excited to have that opportunity. So a 2 bedroom, which is our bread and butter product, sells for $208,000 for 1/10 interest today. And that again entitles you to 35 days a year plus space available.
So it's a $2,080,000 property.
That's right.
And then there are additional fees because you have to pay property taxes, right? And homeowner association dues or something like that.
Because you're getting a deed, you do pay property taxes, and you pay those direct. And then there's also homeowners association dues, which range on average to probably $600 to $800 a month.
That's in addition to the property taxes.
That's right. That's right.
Okay, and then you pay just your portion of the property taxes.
That's right.
Okay, yeah, you better hope
1/10
nobody else
interest.
defaults, because you
Well, no. The nice thing is your deed is separated, so you're not responsible for anybody else's
Oh, that's
pay
nice.
their
But wait a minute,
obligations.
how does if someone doesn't pay their portion, how do the tax authorities get to collect?
They would just as they would with your home, they would have an ability to attach your 1/10 interest in that property.
Really?
So they-
Just the 1/10 interest, not the whole, not foreclose on the whole thing.
That's right. So we work
Wow,
very
that's
closely
really
with the
interesting.
tax assessor on that.
Wow. Okay. We are in the studio here with Todd Chapman, who's discussing different like owning vacation homes. I guess I
Fractional
call it fractional
ownership, so
ownership.
vacation
We'll get into
property.
other things too, because when we talk about Tahoe, it's a little different. He's got a different product there. Okay, so our theme is famous phrases from TV shows or movies. We're going to cut to our first commercial break, and here's our first trivia question. Name the movie from which this quote came from. We're going to need a bigger boat. The first three callers with the correct answer win a
I know
free.
that one.
I gotta say it's scarier
Watched
though.
it last
Don't say it yet.
Yeah,
Okay.
that's it.
The first three callers with the correct answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Name the movie from which this quote came from. We're going to need a bigger boat. 888-912-1190. Make sure to include your name, email address, and speak slowly and spell out your information for us one letter at a time, and we will be right back. Excellent.
Sweet.
Having fun so far?
Having lots of fun.
Good.
Getting me talking about
You're
real
going
estate.
to
It's
love the
easy.
next one. Yeah, exactly. Let me introduce it like that. Okay. Oh yeah. So let's take our headphones off because it's commercial break, and you can talk to us as much as you want.
Oh, okay. Oh gosh, here we go. The leg. Give me a little leg, Edward.
Give me a little leg.
Oh, leg. Hold that
Long
leg.
story, but
It's hot in here.
that's,
I should have worn shorts.
That's
Ah,
right.
yes, you should have.
I should have.
Zippo. Thank you.
Yeah. Oh. I don't need to go to the barber.
No, I got you using the scissors cutting hair.
Let's see. What's today? July, right?
27.
Excellent.
So is your office at the Heritage Place?
No, we're just downtown in the corner of Sandsman Pine.
I know where you can buy something for $208,000.
But you can only stay there 10 days.
Yeah.
33 days of the year.
So what you do?
Now
Keep
it's
moving
space
around.
available. Let's keep moving around.
Yeah, right. So how many units or percentage of units have you guys sold so far? Or you
So,
gonna say?
yeah, of course, about over 50%.
Okay.
So we're, we're in the home stretch,
Plugging
as
right
they
along.
say. That's right.
Yeah.
Do you think there's a possibility that, like, if you can't sell it, the price will go down?
No.
No.
It's we're because of the way the hotel is performing, we're
You don't
passing.
have to.
We make money on the rest, and in particular, and I didn't bring it up. In the last 90 days, we've seen more sales than we've seen in the last 3 years.
Oh my gosh, that's great.
Well, the market,
and
yeah,
part of it is
turns-
just market perception, consumer perception.
Yeah.
The same exactly starting to take hold of Tahoe. Yeah, consumers a fickle thing, right? When they think there's deals to be had, they're shy, and when they think that things are starting to turn, they start
Well,
to
and
get back.
that's exactly what happened in the real estate market in the Bay Area and all over the country. It's everything was keep dropping. Oh, we'll just keep waiting until they drop the price. In fact, the fourth quarter of 11 was a horrible quarter for sales because people were just dropping, and the buyers were just going. The newspaper articles are saying it's still going to be cheaper in 6 months, so I ain't buying.
That's
And then all of a sudden, in the spring, it's like a light switch.
Yep.
You go from you can't get any offers to now, no matter what you put it at, as long as it's within reason, you're getting multiple offers. And everyone's complaining about no inventory now.
That's exactly
I
it.
love real estate. It's so amazing.
Short memories in real estate.
I know, amazing. All right, good.
We also announced the
Wiener
wiener.
of the last contest, the special trivia contest.
Special one, that's right. We have a special one. Actually, we should give away. Get him.
That's
give
right.
us
We'll give
some
away
weeks.
a fractional.
I mean, I
interest.
give away 3 days. I give away.
Come on, guys.
No, it's only $200,000. No, I give
Well,
away.
their net cost is going to be what? A fraction of that.
A fraction. That's why they call it fractional. I like the way he thinks.
That's right.
We give away like 3-day, 2-night stays at night. Well, you've heard it.
Yeah, yeah.
So we get really nice places. Fairmont, Sonoma, Mission Inn.
There you
I have
go.
not been to the property since it was
I
converted.
think I need
Last
to
time
have
I
you
went,
guys
yeah,
there.
I know, I have
Visit.
not gone. So you live in Marin, I'm not even a tourist.
Okay, ready? Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host Mark Hunt. We're in the studio here with Todd Chapman. And when we cut to the first commercial break, we asked this first trivia question. Name the movie from which this quote came from. We're going to need a bigger boat. All right, give us the answer. Go ahead.
Roy Scheider and Jaws.
Jaws, that is
Indeed.
correct. All right, now, last week we had another special trivia contest where the winner was going to receive a free 2-night stay at the Mount View Hotel and
That's
Spa.
right. I
And
want to go there.
here was their promotion. Experience the art of relaxation at the Mount View Hotel and Spa in Napa Valley. Mount View Hotel and Spa is a green hotel celebrating 100 years of hospitality and set in the center of Calistoga's many pleasures. Contact their friendly concierge staff 24/7. Call 800-816-6877 or visit them online at www.mountviewhotel.com. And here was the question. Almost a third of American households have one, but use it only a couple of times per year. What is it?
I had no idea.
It's not a vacuum cleaner. It is a Scrabble game. And
Scrabble
it's Scrabble
game.
game,
Oh my
yes.
gosh.
And Lonnie from Redwood City was the winner.
Way to go.
Congratulations.
Go, Lonnie.
All right. And off air, we were talking about seeing if we could get Todd here to throw a fractionalized interest as part of the promotion, but
Special
just
trivia
can't
contest.
quite get him to do that yet. Okay.
Maybe we'll work on it night.
Okay, that works out. Mark, did you want to ask another specific question?
Well, I was curious. What do you have like a profile for the type of people who are plunking down $200,000 for a fractional interest at the Ghirardelli Square?
So for Ghirardelli Square, our primary buyer comes from a 120-mile radius of San Francisco, and usually they fit the empty nester, someone in their late 50s to 60s.
You're saying within 120 miles, so not people from another country. You're saying people in the Bay Area or in the Northern California.
That's right.
Wow.
So it's folks that want to participate in some of the great things San Francisco has to offer, be it food, culture, shopping, sports, and they don't want to, as Edward pointed out, plunk down $2 million for a Bayview condo, but they want to have an experience where they can stay, they can leave things there, and they can have someone who takes care of them and not have to worry about it when they do come to San Francisco.
That makes a lot of sense because there's so many things to do, culture-wise, and spend time in the city. But not everybody has, like you said, the money to plunk down to actually buy a apartment or condo or rent an apartment full time.
Well, the other nice thing about the product, one, it's designed to actually fulfill the need they have. Most people we found only come to the city somewhere between 20 and 30 days a year, and usually in 2 to 3 day increments. The other nice thing is the program has to offer that a whole condo would not, is that these owners can take time that they don't use or don't plan to use, and they can exchange it for time anywhere within Fairmont's international portfolio. So be it the Plaza Hotel in New York, the Peace Hotel in Beijing, Telluride Ski Resort, you can really have flexibility in how you use your time at Fairmont Heritage Place, Ghirardelli Square.
So in many ways, it's like it. So that's in the way that it is like a timeshare because if you have unused days, you can
Bank them.
That's right.
Bank them, use them, trade them.
That's
Wow,
right.
Okay.
Or rent them.
Rent 'em.
We recently instituted a rental program where owners that aren't using their time can place their unused time with us, and we'll rent it through the hotel operations, which, as I said, has been highly successful at the property.
And what kind of nightly rent rate could someone expect?
So it depends on the season, but because San Francisco is such a kind of an evergreen city, that demand is there throughout the year. Our general rates are for a 2-bedroom north of $1,000 a night.
That's amazing. Wow. And not a problem getting that. Huh?
We ran at 97% occupancy last year.
I would think the profile of people who stay at the hotel at those prices are a little bit different than the people who are buying.
Not really. In fact, we often say that our most qualified potential buyer is one of our hotel guests. And what we see is we do see executives, celebrities, but we also see a lot of families. The way the product is designed with multiple bedrooms and kitchens, and with Gear Deli and Gear Deli chocolate there, it really attracts a fairly broad base of people.
I gotta come look at this. This sounds great.
Well, that's one of the interesting things is that when you have kids, like right now, my daughter's 15, and it's really difficult to share one bed. I mean, I'm just kidding. Just to share one. Yeah, I'm just kidding. But just to have, let's say, my wife and me in the room, and then have my daughter. Let's see. I mean, she hates those rollaway beds, and wife wants a little privacy. My daughter wants to necessarily be with us, and you start going 2 rooms at a hotel. It gets pretty expensive.
That's right, and I think both in our San Francisco property and our Constellation and North Star property, we see that a lot, where people do the equivalency test with a hotel, and they say, well, I really would need 2 rooms, and so this actually provides a better economic option for me.
Well, let's shift over to Tahoe for a minute, because that's different. You don't do you're not doing fractionalized deeds there, and this one's over in North Star. So what are you doing in Tahoe?
That's right. It's actually a bit of a reverse story. We, in 2011, the fall of 2011, we purchased from Ritz-Carlton Development Company some of their unsold fractional units. They were running a fractional program. We decided when we purchased it to actually change the system and make it whole ownership units, because we thought that was maybe a more attractive product in that location, in that market, for consumers. And so there we offer 2, 3, and 4 bedroom homes. In a really unique location, mid-mountain at North Star Ski Resort, connected via Skybridge to the Ritz-Carlton.
Okay, but the prices aren't $200,000 for that.
They're not.
Because you're owning the whole thing.
You're owning the whole
How
thing.
much are those?
So those range from prices in the 2-bedroom ranged for $950,000 to our largest 4-bedroom will price out around $2.5 million.
Wow. I mean, I guess they got to be pretty nice.
They're very nice. They're very nicely furnished. They're all furnished, so you can buy and move in. Again, they were built by Ritz-Carlton for Ritz-Carlton when we took over those units. So they're very well done.
And then you're not restricted to 35 days because you own the whole thing. You actually could live there if you want.
You could.
And if you don't want to live there or vacation there all the time, do you handle, or does Ritz-Carlton handle the renting out of them?
We do. We have a team of people. Much like the experience you have at Gear Deli, we have a team of people from the moment you check in at the property. They take your car, they take your luggage, much like you'd have at a hotel experience. Take you up to your room, and we have concierges and everything else that'll handle all your needs. And for rental, we have a team of people that manage that as well. So if you said, we'd like to stay a couple weeks of the year, in the winter and some in the summer, but the rest of the time we'd like you to rent our unit out, we're able to do that for you.
I was going to say, give us an example of high time and low time for rents that you see.
Sure. The high time in Lake Tahoe region generally falls in around major holidays. In the winter season, that's Christmas to New Year's. That's the prime time. President's Week, Martin Luther King, and a few other weeks spread throughout the ski season. During the Christmas to New Year's time range, we will have folks that will rent homes from us for in excess of $2,000 a night. So there's a lot of demand at that period of time. In the lower season, so if someone who says, I personally believe some of the most beautiful time in Lake Tahoe is actually in the spring and fall.
Sure.
There's not a lot of people up there, but the weather is actually spectacular.
Yeah.
Someone can come up there and experience a stay with us for anywhere from $400 to $600 a night.
Well, and also spring skiing.
Spring skiing.
Yeah.
Last year we actually were skiing on 4th of July, so it depends on the season, but you can get quite a variety of experiences.
So when you promote these North Star condominiums, are you also talking about the investment opportunity or investment aspect of it? And I'm just curious how your marketing pitch goes to potential clients.
Not really. The Constellation at North Star product for us is really a lifestyle product. So it's for people that really want to spend quality time either with family or friends up in Lake Tahoe. It's really designed for someone who works really hard, comes up to Tahoe, wants to park their car, doesn't want to have to get in it again. To go skiing in the morning,
Right.
They just go downstairs, they get on the mountain, they come back at the end of the day, they walk to the restaurant at the Ritz-Carlton, they have a really convenient, hassle-free experience.
Well, that's awesome. I know I've spent time at North Star. It's great. So these are how many unsold units do you still have? Are you able to share that with
Sure.
us?
So we have 17 fully built and furnished units today. We actually just started taking deposits about a month ago, and we'll close our first 2 sales actually this week and next week.
So these are recently completed, so they're new.
The building was finished in 2009. We completed our purchase in 2011, and so we've been going through the paperwork with the Department of Real Estate since then.
And then people get the same tax advantages. I mean, for that one, that would be a second home. Going back to the fractional one, they would get the write off their real estate taxes.
That's right.
And if they rent it out, and I have to go back to the rule on that one, so it's a little more complicated for taxes. But so Todd, if people are interested in either the Ghirardelli or the North Star property, how would they get a hold of you?
So they can go to our JMA Ventures website, which is www.jmaventuresllc.com, or either of the websites for the projects, which is www.fairmont@ghirardelli.com or www.constellationresidences.com.
Okay, stick with us because we're going to be talking about some other real estate, which obviously I know that you know a lot about real estate. And before we cut to our second commercial break, we have another trivia question, another special contest
question
next week. But let me give you the information here. The Westin Verasa Napa is located in the legendary Napa Valley, situated in downtown just across from the world-famous Napa Valley wine train. Take in nearby attractions like the Napa Valley Opera House and the Oxbow Public Market. The Westin Verasa Napa offers 160 king suites that allow you to relax or to be productive, whatever you're in the mood for. In the evening, unwind with the award-winning cuisine of Chef Ken Frank's French restaurant at La Togue, recipient of Michelin star. www.westinnapa.com. You can also call them at 707-257-1800. Now, the second commercial break, here is the trivia question, and it is famous phrases from TV shows or movies. And I know Mark's going to know this one. In this TV show, Jimmy says, "Jimmy's got the moves," and George says, "George is getting angry." The first, I'm sorry, I crack myself up sometimes. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Again, their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In this TV show, Jimmy says, "Jimmy's got the moves," and George says, "George is getting angry." Call 888-912-1190. Make sure to include your name, email address, and make sure that you speak slowly and spell out your email for us 1 letter at a time, and we will be right back. Good.
Headphones.
The first Jimmy's Got the Moves, I didn't quite catch that.
Oh, that's one of my
George,
favorites.
Now,
Sam
remember
Bessing
it?
in Seinfeld.
there you go.
I know.
You knew it was, yeah.
I love that one.
George is
And then George starts talking like Jimmy.
What's that?
Then George starts talking.
There's
Yeah,
a mini
exactly.
Third person.
Seinfeld episode, the first one they've ever done since they went off 10
Really?
plus years ago. It's on the web. I saw it the other. It's pretty clever.
The Lost episodes.
It's
Lost
not.
one
It's
is
part of. Well, Seinfeld has a new thing he's doing. Drinking coffee in cars with comics or something like that. Sounds like that. His first episode was with Larry David, and it's hilarious. Just sitting in a restaurant talking the way those guys talk. But there's also an episode with Larry David watching TV, and he's watching a Seinfeld episode, but you quickly figure out that it's not an old Seinfeld episode, which is what I thought it was, because they start talking about iPhones and the internet. And Seinfeld went off the air pre-internet.
That's right.
When did it go off the air?
Pre.
No.
Wasn't it that?
No, it went up pre-iPhone for sure.
Pre-iPhone,
Yeah,
but
sure.
not, yeah, not internet.
Yeah. Okay, but anyway, yeah, it's
That's funny.
So will you give me the Oops award and allow me to restate the website for our Constellation property?
Absolutely.
Constellation at northstar.com.
Yes, it is. Yes, Constellation Residences.
All right, we'll do the trivia contest, and then I'll come back to it. Oh, and then get into email time.
Email time.
Right.
Yes, indeed.
Okay. Ready? And away we go. Ready? Ready.
Kramer's ready.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host, Mark Hunt. And when we cut to the second commercial break, we ask this trivia question. In this TV show, Jimmy says, Jimmy's got the moves. And George says, George is getting angry. All right.
Seinfeld.
That is correct. And Todd, you're still with us, and you said you wanted to win the Oops Award. Go ahead.
I did. My marketing folks would kill me. I gave the wrong website address for our Constellation project. The correct address is constellation@northstar.com.
Okay, excellent. And Mark, we have an email that we received from a listener that says, what advantages do you offer compared to other lenders in your business? You better explain that because a lot of people may not know what they're talking about.
Indeed. Well, for new listeners, I am president of Pacific Private Money. We are a hard money lender, as we're called. Some people say private money now, but private money lender, hard money lender in Northern California. We're based in Marin County. And we generally make loans to real estate investors. So the banks, after the whole mortgage meltdown, largely stopped making loans to real estate investors, those who would maybe buy property to fix and flip, or maybe buying rental income property, or if they own investment property, pulling money out, if you have equity, is another thing that banks used to do a lot of, and they're just not doing that anymore. So at Pacific Private Money, we are answering the phones that pretty much are ringing every day from real estate investors who are looking to get into the market now that many people believe it's at least hit bottom, if not maybe in some semblance of a recovery, and are looking to make money in real estate. There are opportunities out there to either acquire rental property, because you can get a lot of rent for a lot less cost in this market. You can also buy fix and flip. A lot of people who are very handy have been doing that for the last couple of years in this market and making some good money. And so at Pacific, we're one of maybe a couple of dozen noteworthy hard money lenders in the Bay Area who are active in the market. And gosh, why would you come to Pacific? Well, you get to talk to me.
There you go.
And I come from a real estate development background. So for 20 years before I got into hard money lending, I worked in a family-owned development company. So I was on the other side of the table from lenders, and we borrowed a lot of money. We did a lot of real estate projects, and we worked with contractors and rehabbers, and so I speak that language. Whereas and a lot of my peers who are also lenders come from either mortgage loan origination or from banking, and they tend to just kind of have a different approach and maybe attitude. And I just I don't know. I think I am easier to speak with than some of my peers. I think at least that's the feedback I get from a lot of
Well,
callers.
the feedback I get is that you're honest, and I've known a lot of hard money lenders who are not honest. To me, that's the biggest advantage dealing with
I
you.
do hear war stories from people who oftentimes will call when they're literally days away from having to close, and they were working with another hard money lender, and they were made certain promises, and those promises were not kept. So it's bait and switch is unfortunately really prevalent in our industry, and so promising a rate and a certain amount of fees, and then coming back when they know the person is running out of time, the borrower that is, who maybe has to close escrow or loses a deposit, and then all of a sudden saying, oh, well, my lender wants another point or two, or I got to bump the yield up, and just, I really hate that. I just don't think that's fair. And so I really try, as much as I really love my private lenders, the people who fund my loans, I want to take care of them because they're the source of my business capital. But on the other hand, I also really like my borrowers too. I like repeat borrower clients.
Sure.
And the only way you get repeat borrower clients is to treat them well, and to give them good pricing and good service, and not do the bait and switch. And so we're really a matchmaker between people with money who are looking to lend that money out in a secured fashion and get high yields for it. A lot of people lend from their IRA, or they'll lend from their trust savings. And this is a great way to boost the yield that you can earn with your savings or your IRA monies by lending it out, secured by real estate. You get anywhere from 8% or more fixed annual interest returns paid monthly. So it's a great way to do that. But we also want to match them up with borrowers who've got got at least a track record, or they've got good credit, or something about them. Their lender profile is positive, and they've got a good exit strategy. They've got a good business model for basically, what are you going to do with the money? How are you going to utilize that money, and how are you going to pay, the lender back? How are you going to pay my lender back? So,
Well, one of the things I was going to say is that when you were mentioning about the interest rates, is that one of the things that sets you apart from a lot of other lenders too is that you pay your lender clients a very good rate. And a lot of times other lenders aren't doing that, so you're really fair to your borrowers. Don't bait and switch them, but then also from your lender investors, you give them a good rate of return.
well, we do, because there are private lenders out there who try to capture a rather large servicing spread, as they call it, the difference between the note rate, what the borrower is paying, and what's called the sold rate or the sale rate, which is the rate that the investor gets. And it's not unusual if you go through, another Bay Area private lender, they may only pay you 8% but loan that money out at 10. Whereas at Pacific, we generally solve for maybe 0.5% to 1% servicing spread. So we're not quite as aggressive as some people out there, and so we're trying to really toe the line between getting the best pricing for the borrower client, but providing a fair and quite compelling return to our lender client.
Yeah, especially in today's market.
Oh my gosh, we're
Yeah,
zero
good
interest rate environment.
Yeah.
Get 8 to 10% on your money. Are you kidding me?
Yeah, exactly.
Yeah.
Todd, any questions for Mark?
Well, no, it sounds like, Mark, you have good business ethos, which I agree is very important. It's certainly something that's kept us around for 25 years as well. Have you seen any kind of change in where the business you're finding is taking place? Is it, in Marin County, San Francisco, are you seeing any changing dynamics? Are you being pushed further out in terms of where the opportunities are for investors?
Well, we actually do more loans in outlying areas of the Bay Area because the opportunity for the real estate investor is not so much in Marin or San Francisco, where you didn't have the price drops you had in other markets. But let's say East Contra Costa County, for example, is a great example. I mean, they built a tremendous number of new houses out there off of Highway 4 in Pittsburgh, Antioch, Brentwood, Oakley area. And a lot of those homes, newer homes that were built in 04, 05, 06, they sold for anywhere from $600,000 to $800,000, and they're now trading at $300,000 to $400,000. So they literally had a 50% price dip, and so there's opportunities out there to buy foreclosure or short sale opportunities and pick them up at a good price and rent them out at a price that makes sense. Or if you can get a good enough deal, oftentimes maybe via short sale you can actually flip that property and maybe make a quick $10,000, $15,000, $20,000.
Okay. We are going to have people get a hold of you.
Oh, sure. Website, PacificPrivateMoney.com. That's our borrower website, PacificPrivateMoney.com. And if you're listening out there and you've got some cash savings in your IRA or in your savings account burning a hole in your pocket, you don't want to put it in the stock market, you want to get a nice high fixed yield, try our investor website, which is PacificPrivateInvestments.com. That's investments plural, PacificPrivateInvestments.com. Or you can call our office anytime at 415-883-2150.
You can also go to bestofinvesting.com website and see Mark
Absolutely.
there. Okay, we're going to cut to our third and final trivia question, commercial break. In what movie might you hear the main character say, Lieutenant Dan? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. You don't have to write that down. You know that answer. Call 888-912-1190. That's 888-912-1190 to answer this question. In what movie might you hear the main character say, Lieutenant Dan? Make sure to include your name, email address, and remember, please speak slowly and spell out your information for us one letter at a time, and we will be right back.
Indeed.
Everyone knows the answer to that one?
Forrest Gump.
You're making them too easy.
Gotta be easy.
Well, a couple of them were too hard last time.
Yeah, they were.
Yeah, you had some hard
I
ones.
had some hard
I couldn't answer a single one in that one.
I
Well,
forgot
you must tune in to find out. Sometimes they're easy, sometimes they're hard.
That's it.
You gotta keep listening.
when Pete Rose crashed into the.
Ray Fosse?
The guy now knew the answer. Yeah, you knew. I think you knew the answer too, but he knew the year, 1970. So
Yep.
unless- Yeah.
No. I
Oh, you said
I
70.
the 1970.
Oh, and then he said
also
colorized. He says, I think.
Oh yeah,
that was
that's
for
what he said.
colorized.
Yeah.
So what are we talking about in our final segment?
I was thinking about like just what's going on in real estate, and also touch on the second home market, kind of what's going on, and
Sure.
that's one thing we can kind of go over. That sound good?
Yeah, that sounds really good.
My in-laws are from Stockton, so I know the distressed market. I've got a lot of friends and family members that actually do participate in the foreclosure and short sales. They're buying a bunch of inventory. At least they've tried. It's getting more crowded there.
Right. Oakland, Alameda County is huge. We make a ton of loans in Alameda County. So Contra Costa County, Alameda County, Solano County, those are really big. Not so much San Joaquin, just because a lot of my lenders don't want to go out that far. So that's really an untapped market as far as my business model is. I could probably do a lot more loans if I had more investors who happen to be Central Valley oriented, for whom they wouldn't mind driving out. Because there's a ton of new homes out there. In fact, my wife and I learned that the hard way. We actually bought
This one, you never change.
So you just
Because
checking
it
just to
keeps
make
it-
sure
we
that
didn't,
So I
we didn't
keep
know
the
how far
sound,
it would drop, and I know
so
we did. So
When I
we
switch
bought
to you,
distressed
your
property
mouse,
at the beginning of 2000,
synchronized.
stock.
and if we go on for like hours and hours, it'll just start all over again. And go over the old
No,
stuff.
if we go over hours and hours, I just walk it out. Feed
So
the
I'll
meter.
close up after
You
you
got it. Yeah.
And a killer steal, and then they're now
Take this
trading
back to
at
CMCM.
$3.
Yeah.
Oh, I'm the speaker next week,
My
August
brother
1st.
owns a couple
Yeah?
homes out
At
there.
CMCM.
He bought
Oh.
absolutely the wrong
When?
time. But he's
August
he's
1st,
sticking
that's
with it.
Wednesday night
We'll
at
figure it
7.
out.
It's so hard.
Yeah.
I feel
Yeah.
for
Just
people
what are you
who,
gonna
And remember we go,
just really
like
don't
you and I
know
went
for
to,
whatever reason, and there's a lot of reasons why you
where did
don't
we go
want
to,
to listen
members
people
members
podcasts.
meeting?
Yeah.
But so many people are.
So,
It's just really hard
August
to just listen to how many
1st,
people have walked
Wednesday,
At what time?
away.
August
I-
1st,
not scot-free,
7
because it does,
o'clock.
hurt your credit.
It's funny. Ordinarily, I
I think.
wouldn't have been able to
It's
go,
interesting.
but
We look at a lot
I
of
think I can.
residential in Las Vegas, and it's interesting. So many people have walked away from their investment homes back in the day.
Yeah.
The rental market is actually pretty strong because these people can't own, they can't
Right.
finance,
Right.
but they've got money, they've got jobs, but they cannot own a home, at least for another 5 or 6 years.
I was in 2006. I was part of a San Jose-based real estate investment group. It was actually hosted by the guys who call themselves the Real Estate Guys. Don't know if
Yeah.
you've ever heard
Yeah,
of
no, I
the
have.
radio
Yeah.
show.
Yeah.
Robert Helms and Russell. And so I liked those guys. So in 2006 was right before the market crashed, and they were bringing a lot of their students and clients to Vegas. In fact, they were crowing in early 2007 how all the people who had listened to them, that was the highest appreciating city in America in 2006.
Which was?
It was like 60% appreciation.
Las Vegas.
Las Vegas.
Las Vegas, oh yeah.
Yeah. And of course, then a lot of they don't have that RIA club anymore because so many of the people who were part of that just got wiped out.
Yeah, I remember having
Including people on their own staff.
this neighbor who was just going crazy about, oh yeah, man, Vegas, I'm just going there in rental markets and I'm just doing great, I'm buying houses and I'm flipping them and making $5,000. I go,
City center,
that's a lot of risk to
buy
just
a
make
condotel for $1,000 down, and then you're gonna flip. People are gonna flip those.
Well,
things
you know what I
and make
missed?
money,
I
and they all
missed
lost.
Stefan Piscano.
Yeah.
I forgot to bid before it closed. Could have gotten a Vegas condo for $15,400. I put it in my calendar, but I forgot to put it in my cell phone, and then the date passed. No.
Gonna regret that one.
Yeah. What does Homer say? Doink. Okay.
All right.
Um,
Final segment.
Final segment. Here we go. Thanks for sticking around.
Of course, enjoy it.
Ready? Here we go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with my famous co-host, Mark Hahn from Pacific Private Money. When we cut to the third commercial break, we asked this trivia question. In what movie might you hear the main character say, Lieutenant Dan? And that would be?
Forrest Gump.
That's right, because Mama always said life is like a box of chocolates.
We're still talking about chocolate now.
Still chocolate.
Yeah,
That's like your
that's-
toast.
It's on your
That's what
mind.
that's still on my mind.
I know where I'm
Chocolate
going to Powell's after this.
Chocolate is always on my mind. It's just like what Georgia's always on my mind.
Georgia.
Yeah, no, mine's chocolate. And let's see, Mark, what is going on in real estate? And we'll also talk about second homes because that's part of real estate too.
Well, anybody who's a real estate investor out there right now looking to get in on this market, I'm hearing a lot of frustration because it's kind of like a light switch. We were just talking about it off the air. In the fourth quarter of 2011, real estate investors were having a real tough time selling the properties they had bought to fix and flip, as were homeowners who were in distress. I mean, just sales in general in the fourth quarter of 2011 were just horrible. I mean, nothing was moving, and the prices were falling, and then here comes 2012, first quarter. Nobody really knew what 2012 was going to look like. I mean, we were all hoping it was going to be, maybe we were going to hit the bottom of the market,
Kind of bounce back a little bit.
Yeah, because that's what we were predicting in the beginning of 2011. Of course, that did not happen in 11. We never saw the spring kind of flurry of activity. Well, spring of 2012, and what starts happening is the real estate investors who were waiting on the sidelines, they all started coming back out of the woodwork again. And like a light switch, all of a sudden, not only are homes moving, but they're now getting multiple offers. And
Now, are the banks loosening up with credit, or is it people's confidence?
well, I think it's really it's a supply and demand thing. You've got more demand, you've got more people coming into the market, deciding that, well, okay, if housing prices, aren't going to fall any further, then now's the time to buy. So, in 2011, the reason people weren't buying is because the newspaper articles were still predicting further price depreciation over the coming 6 months. So it's like, if you think prices are going to be lower in 6 months from now, you ain't buying today.
No, but as soon as the confidence turns around, then people start buying.
And the
That's
challenge,
what they
and so what's really added to the lack of inventory is the fact that we're still waiting for the banks in 2012 to kind of pick up the pace of foreclosure. There's still a lot of shadow inventory out there. Shadow inventory being those folks who are upside down in their homes and not making their payments, or just not making their payments in general. The number of homes that are in some form of foreclosure, yet the banks have not actually physically foreclosed on the property. So there's that inventory is still really, really high, and so the banks, for whatever reason, whether it be robo-signing or just politically incorrect to do so, they're really not foreclosing at a pace that they should be foreclosing, so that we can clear through that non-performing real estate.
Yeah, because you wonder if there's going to come a point where the market kind of turns a little bit, and it's just enough for them to just flood the gates with inventory.
Well, and that's what really nobody really knows. I mean, I've not talked to anybody with a good crystal ball. I mean, very few people I talk to believe there's going to be any kind of second or third wave or any kind of tsunami that hits the market again in terms of new foreclosures. So I don't know. I don't see that happening where we would have then prices maybe going back down again. So I almost tend to believe that what we're experiencing now, which is stabilization, and in fact, modest price increases in certain markets. I mean, we could have really turned the corner, and that I wouldn't assume, if I were a real estate investor, that prices were going to come down again.
Okay. Well, Todd, you're not in the primary real estate, you're more in the secondary real estate. What do you think?
But I would agree with Mark. I think we're, especially in Northern California, we've approached a level of stability here. And when you look at how prices in San Francisco, for our Fairmont Heritage Place and Ghirardelli Square project, year over year, the median price is up, I think, 6%, which is pretty incredible when you look at the macro. And so what that really does is it takes out that perception that there's always a deal out there. And I think for a couple of years, as Mark suggested, there was just an expectation, whether you were buying homes or suits or cars, the world was on sale. Yeah. People needed to reduce price to match demand. I think that's changed now.
Well, I wonder if your business is a good indicator. Because if suddenly people are buying second homes, then in theory that means more confidence.
I think it does. I mean, that's how we look at it. I think I indicated off air that we've seen at our project at Ghirardelli Square, we've seen more sales in the last 90 days than we've seen in 2 years.
So how come Ben Bernanke doesn't call you and kind of say, what's going on in the economy?
Well, I think he's got his hands full with areas that maybe are a little harder hit than Northern California, because I do think that there's a situational aspect to it. I think when you're looking at how real estate is performing, you need to really look into the market you're talking about. And
well, I think also the little indicators like FedEx and UPS, if they're busy, then the economy seems to be getting better. Of course, when they get together, it's called fed up. But I remember when the market, just the economy was really, really bad, and the UPS driver who I was friendly with, he was having to take over a lot more routes because there wasn't that much business going around.
Wow. So would you attribute some of the popularity, Todd, of your like fractional timeshares and the sales? You just said last 90 days that you guys have seen more sales than ever before. I mean, is some of that attributable to this kind of tech bubble wealth that we're seeing in the Bay Area with all the?
Yeah, how many has Mark Zuckerberg?
Yeah.
None yet. I'm working on our first 100 sale.
I was going to say the Facebook effect, but of course, the stock price is just getting hammered. But that, notwithstanding that, there's still so much wealth in the Bay Area thanks to tech and thanks to the growth of tech specifically in San Francisco.
Right.
So I think that's just. I mean, when you were talking about some of the pricing you're getting for both hotel overnight stays as well as the cost of fractional ownerships, I think what's impressive is that there's that many people with money out there that are doing well that can afford to buy that, because if people were doing as poorly as some might believe, we're doing, nationally when you listen to political news, that would never happen.
I think that's partly responsible. I think I'd go back to what Edward said earlier. I think confidence is a huge driver, especially for us in the second home market. I mean, we're not a need product, we're a want product, and I think in particular in places like Lake Tahoe, where people develop the confidence to say, I'm going to invest in my lifestyle, I'm going to invest in my family, I want to spend quality time with my family, because that's the one commodity we know that we've only got a fixed amount of. And we're seeing people up there really start to turn the corner and make the decision to buy. And like in the market up there, in the last 6 months, we've seen absorption of year over year 10%.
Huh.
And of that increased absorption, we're seeing distressed and short sales decrease by 50%. So you're starting to see that inventory get out of the market. Buyers are realizing that there's not a deal around every corner, and for non-commodity product, which we specialize in, high-end, well-positioned
Do
stuff.
you guys help with financing?
We do it at Gear Square. We do, and we've done that partly because it's fractional, and there's not a lot of lenders out there that will lend to the product.
I was
Although
going to say,
we're seeing
what
more come
about
back.
do you ever lend on fractional?
Well, if I found a lender who felt comfortable with that collateral, I absolutely could. Nothing would stop me from papering a loan on a fractional ownership. It'd not be a lot different than doing it on a condo or even a tenancy in common.
Right.
Yeah.
It's interesting.
Make sure I take Mark's information down as I leave.
Yeah, because every once in a while, someone might not quite qualify for, because your prices are, more than the average starter home.
That's
of
right.
course, 900,000 for Tahoe.
Yep.
For that, or the fractional would be 200,000, but they'd only get.
Right, it's still a sizable check if you're all cash.
Well, especially if you have to pay the property taxes and
Right.
the homeowner's dues.
The nice thing for those owners is they do the math and they say my property taxes and my HOA equate to about $370 a night, and then they look at the nightly rate we're getting on the rental and say there's $1,000. So there's a very large spread there that someone who's savvy in investing can say, wow, that really can make me feel more comfortable.
Exactly. So then it actually can make some economic sense.
That's right.
On that. Any last words before we go to thoughts for the day, Mark?
Well, recovery in the real estate market is really a function of jobs and wage growth, and certainly in the Bay Area, I think we've got good jobs and good wage growth, and so maybe we might be in a little bit of our own bubble here in the Bay Area, but I think that's attributing to some of the real estate activity we're seeing today.
Right. Todd, thank you for joining us in the studio here, and here are our thoughts for the day. In Washington State, they have an interesting law. You cannot carry a concealed weapon that is over 6 feet in length. And they need that law because, how does one conceal a weapon that large? I haven't figured that one out yet. And it is estimated that 4 million junk telephone calls are made every day. And I can attest to that because I receive half of them. And with that, we invite you to tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. Excellent.
Keep your phones on for